Let's start with Credit Suisse. You know, last weekend was a doozy. Everybody was very concerned, worried about the fate of Credit Suisse. We talked about it in the context of, is this some kind of Lehman moment? We talked about, can they get to the 27th of October when they're going to announce earnings and announce this restructuring plan? Where does Credit Suisse lie in your mind right now, and as a stock pick as well?
Yeah, my focus is, on the U.S. banks, as you know. I think, clearly the company said they're going to come out in late October with a restructuring plan. I think the street in general is kind of waiting to see what they have to say. But, you made the reference to, 2008 and Lehman Brothers. If you kind of compare and contrast just the financial services system in general today versus then, it's remarkably different in terms of, just the capital, the liquidity, the health of the balance sheets of the banks, particularly in the U.S. So I do think it's not a great comparison to make.
Okay, so let's take that one for at least now off the table. As you look at the U.S. banks, which I know you do cover so very well, if you like one or two, which ones do you like the most? And frankly, which ones do you hate?
Yeah, no, we'll obviously kick off the third quarter earnings season next Friday with, I think, more than half the banks reporting in a single day. And you're actually going to see pretty strong results, right? Net interest income should be another record quarter. As the group benefits from higher interest rates. Trading, you guys talk a lot about the volatility in the markets. Trading operations, the banks, should benefit from that. And at the same time, we expect loan losses, ironically, to be at 20 or 50-year lows, rather. So I think generally, the group should perform well in a quarter. Names like a Wells Fargo or a Bank of America that are particularly exposed to the benefit of higher rates, should stand out.
So, but just dollar for dollar, if I gave you $1 and said you could only buy one, who do you buy?
At the kind of going into the quarter, probably Wells Fargo stands out at the moment, just given, probably the most benefit to higher rates.
That's a value play for you at this point.
Yeah, it is, trading, not much more than tangible book for a company that we think in a few years could put up, a mid-teens ROTCE.
Can I just ask you, Jason, though, for the last decade, I feel like, if you ask a lot of folks in your position, which bank do you like from a value play position, which has the highest chance to go higher, everyone would have sat around and said Wells Fargo. They'd say it's a mess, it should get cleaned up. If it gets cleaned up, it'll be amazing. And here we are sitting around, what is it? I mean, I just look at the calendar, right? Why do you think that is?
Yeah, no, I think you have a new management team that, that took over, a few years ago. That's done, I think, a tremendous job in terms of cleaning it up. And, now they're at the point where they got the new products in place, new management team and board in place, and the results should start to improve, particularly on a relative basis, I think, as you look out over the next couple of years.